Okay. G'day there, guys. There's only a few in at the moment, but might look to get the ball rolling. How are you, Bobby? Hope you're doing well, mate. Good weekend, I'm hoping. Same with everyone. I hope we all had a good weekend. Well, from my end, it was just a kids' weekend. So we had to run around on Saturday. My little girl had her first ballet lesson, which was, God, it's funny. It's great watching them. It's really cute. So she's all into it. So we'll see how she goes. Becomes a little ballerina. And the little fella had basketball before that. So the rest of the day we sort of just had a bit of an afternoon nap, bit of work around the house. So it was a pretty uneventful weekend, which was good though, just to unwind. Bit of work yesterday on the computer as well. Yeah, Daniel. Excuse me. I'm still getting over this cough. Nice in Queensland. No, you're gonna rub it in, eh? It's actually nice weather down here in Melbourne too. Anyway, sun's out. It's kind of unusual. That could change this afternoon. All right, we'll jump into it. And Jason's showing up as well in Cairns, eh? We got the sun out, but it's still cold. Still got a jumper and jeans on and stuff. Sometimes a beanie. All right, let's rip into it. Thanks for joining us. It's a lovely Monday, by all accounts, it seems. Anyone that's new, welcome to Trade Setup and our live stream. Feel free to sign up to us on Twitter. You see the top left-hand corner. That's our Twitter handle. I'm getting good at this internet stuff. So our Twitter handle at trade_setup. So if you search that, you should see us there. You can link in and then just watch to see what we've got coming through. A few bits and pieces we like, a few posts we do as well. Just to keep up to date. But the most important is probably down the right-hand corner. Subscribe to us at YouTube. As at TradeSetup capital AU. Anytime we go live, if you miss it somewhere else, like through the app, the alert service, then you'll get it through there. And we only give general advice, just a reminder. What I yabber on about is just my own opinions. So don't take it as gospel. Although I'm doing all right so far. So someone's got to toot my horn. It's not you guys, it'll be me. All right, let's rip into it then. Let's minimize that. Actually, I'll get rid of that. I'll get the screen up and running properly. All right. So US was down on was it Friday night or early hours of the morning? Laura, g'day, buddy. Yeah, down on Friday, which is everything seems to be at the moment, especially in the US. They're going through earnings. It's all US dollar based at the moment, because it's not unknown. They're well and truly, they're tipping into all-time highs. You got to make sure you know what they've got to have that underlying growth story to continue on to new highs and just continue chugging along. Otherwise, sooner or later, if things are slowing down, they continue to slow down. That anyone wants to buy in the new highs, there's going to get less and less people that are willing to do that and push it up. And there's not some underlying story to kick it on. Now, the market's obviously still going to be weighed down by US-China trade news, which I don't think anything really changed on Friday night. There's no new sort of rhetoric coming through. They've still got a sticking point on Huawei. Is it Huawei? Huawei? I keep saying it. Huawei, I think is what it said. That's still a sticking point for negotiation. So I don't think anything there is going to change too soon. I think if anything, it's probably going to get a bit more argy-bargy as Trump starts to push the envelope a bit more and threatening more tariffs. And then I think China will come back and they'll retaliate, of course. They're not going to get bullied. I think maybe Trump's realizing that. But yeah, that story, I think if anything, it could constrain the market a bit more than anything else. They are meant to be coming to the table to have a bit of a chat soon. And Trump, sure enough, even if he makes it up, if they're not talking, he'll say that they're talking. So he's trying to buoy that market as well, using that news, using the positive spin on trade to try to buoy the market without it getting out of hand. But at the same time, on the flip side of that, he's trying to be harsh on them to try to come to the table, threatening more tariffs. So, one day it's threats, one day it's how well they're going to come and make a deal. So, I mean, all you can do is take it with a grain of salt. And I think the market's starting to do that. The more it goes back and forward like that, the less likely the market's going to react. I think the more focused it's becoming on the US dollar. The US dollar is a story at the moment. I think we did get knocked down on the US dollar previously. That's why you see gold rally $40 or so, above 1440, I think it was, 1445, 6, something like that, on the back of a potential 50 basis point rate cut. So 2 rate cuts essentially. So they're going to come out of the corner flying. But that was on the back of some news by, I think it's like the 2IC for the Fed Reserve. I can't remember, Williams, I think his name is, coming out and saying they've got to come out with guns blazing type of thing. But then he come, and so obviously the market took that because they're so focused on what is coming out from what these Fed Reserve chairman. He's the Fed Reserve chairman of New York, I think, New York Fed Reserve. So they're so focused on what he's saying, or what anyone's saying about interest rates, because that interest rates cut's going to spur on a bit more growth, or is going to try to spur on the growth, or at least stem the tide of contraction in the economy. If it's not going to come from trade war easing or tariffs being taken off, then it's got to come from somewhere. And at the moment, it's focused on the US dollar and interest rate cuts. So then he came out. I think when he said that, when he was spruiking that at some talk somewhere, market took that as a positive for a double rate cut, 50 basis points. But then he's come out and reiterated, or someone's reiterated something on Friday, and I think so they're basically factoring in as a foregone conclusion is 1 rate cut, but not 2. Not going to be as aggressive. So the US dollar obviously had a bit of a bounce, and that's, you saw $20 come off gold. Currencies prior session they took off, and then they turned around and retraced all that gain on Friday night. So everything's pretty much focusing on that US dollar at the moment and what happens there. In the US, so I think they're still ticking along until anything changes significantly. Numbers come out and start disappointing on the downside a bit more, I think you might see, if they start disappointing, then they're probably looking towards rate cuts again, and another rate cut, maybe 2 more by the end of the year from the US. So that could buoy the market. If not, if they come out a bit more positive, that could throw us a bone in the market, and that could tip over, because there's not going to be any rate cuts. It's a bit of a mixed bag of signals, really. But the US, either way you look at it, is well and truly stretched, and our market's ticking along nicely, following them up. We're really close to all-time highs around 68.50. I was still betting. I mean, looking at this is the ASX here, the chart on the daily. That's the start of the year, just that sell-off coming in the Chrissy, and then that big bounce pretty much hasn't looked back, holding higher lows. We discussed this last week. I think it's important to know what's happening and where your anchors are, and we can see Friday's action was quite positive. And really, I don't know. I don't see any reason why it should have been so positive, considering what happened the previous night in the US and in Europe. But that's why you got to follow your charts, not follow what you think's going to happen. Wait till the market shows you. And if you happen to get caught at the wrong side, then so be it. But there's nothing worse than getting caught being out of the market when it takes off. If that's going to be the case, so trade what you see, not what you think in the market. If you think this is going to tip over, and don't forget that little lower high there, if you can see that was at around, what's that high? 67.29. That lower high in a couple of red days there would have saw. I'm just guessing. A lot of people closing there, maybe easing out of the portfolio, really cutting down on what they exposure to the market, booking gains, and of course people book gains. They don't book losses. So if the market turns around and takes off, and they've got in some trending stocks they've taken off the table, and they keep trending, they're sort of left a lot on the table. Whereas, and the ones that are down and they're waiting to come back may never come back for a long time. So I think it's important just to trade what you see. And that market, what we're saying, that push up off 66 day, that's really your anchor to that last little leg up. This is extended higher, got to 67.75, had a pullback, built a lower high, and that really, to me, that push down to 66.25 was really just to clean out a few more people on the buy side that won't hold, are getting scared because of what they're reading, because of and all these sorts of things. you got to remember whatever comes out, what news is coming out, what you're trading on the back of. If you're trading off news flow and all that, it could be rubbish. I mean, you never know what side of the fence people are sitting on. Any professional that's talking the market down may be trying to get set, or they haven't got a position, so they want the market to come down. You don't know what bias people have got, and if you read different news services, they have a different spin on the same sort of thing, and it could be negative, and it could be positive. So it's really hard to get a true confirmed story, which you can really bank on. So I think, but what you can bank on, and there's no other way around it, is price action. You can bank on that. If it's going up, it's going up. Doesn't matter what they're saying. If they're saying the moon's going to fall, if it's going up, it's going up. There's no argument with that. And at the moment, it is going up. And I think that little pullback to that 66.25 was just to clear out a few weak hands. We say weak hands in the market. Just anyone's going to be tentative, a bit nervous. They might have bought it on this little push up in here, bought it, seen it retraced in a lower high, and go, okay, I've learned off my technical analysis 101. Lower high leads to a pullback. Not all the time. You've really got to know what it's in context too. You can't just guess. You see a lower high, jump out, and you can see again lower high here. There's no reason to get out. It didn't break the anchor, turn around and rallied straight back up. So if you got squeezed out here, if you were getting in here, another lower high. It happens all the time, and it's there just to clean out lower highs in here. You can see that market pressure down, but it was really not breaking the trend at all. It's just reversion back to the mean, back to the mean here, back to the mean here, back to the mean. It was just trading off the MAs the whole time. We've just come off the MAs then. So I'm not saying it's going up. I'm just saying that it's showing some really positive sign. I think this move down may be over. If we get a high, like we could just get a run up like this, up into the all-time highs. I'm still gunning for those all-time highs. I don't think anything's particularly changed. The market's still chugging away quite nicely. The US, even if they're stretched, doesn't mean they can't keep going. There's so many factors that I think if they're going to change, they're not going to change quick. And I think this market's just going to keep going, path of least resistance, which is up at the moment. So there's my little rant there. I think Dow, that trend is up. That's from on the daily there. Yep, still ticking away high. Just backed off from the all-time highs, but trend is up. Where's the S&P? There we go. S&P, same sort of scenario there. It hasn't broken the uptrend just yet. Nothing's happened. If it produces a lower high here, comes back down to trade 29.70, for instance, still hasn't broken, and that could just clean people out. Bang, up we go again. So just keep an eye on that. The others, FTSE, run up. The anchor's way down here, just above 73.50. Got a lower high in here. That's going to clean out some weak hands, and then probably turn around and do the same thing, pop back up to the new highs. They're all looking very similar. They're all looking just to squeeze out a few long positions, some weak long positions, and then turn around and race back up again. So on the ASX, if we get a break down below 66, then I think something's dramatically changed. If we just turn around and straight back down from here, yeah, something's changed. We'll have to reassess from there and just see what positions we got, how we're going to manage those. Did we get hit on our stops or didn't we? I'm a big believer in hard stops for everything into the market. So I don't want to be having to watch it, see my alert come off and be away from the screen, not be able to trade it out of something. So I'm a hard stop person. Anyone else is, I'm not sure, and I'm a massive fan of know where you're wrong too, not just hold it, forget about it, put it aside. I mean, of course, I've done that more than enough, but generally, my trading is based around knowing where you're wrong and getting out and reassessing, even if it goes back up. When we just had one BTH, we got stopped out of this one, probably a bit too early in hindsight, straight back up again, and I'm not sure whether we would have been in profit. Can't remember where we got in. Probably not. I don't think so, but either way, that we booked a loss on that, and it's back well above where we got out. But we're wrong. I don't know what's going on there. I haven't got an opinion anymore. I think it looks, it could go up, but from here it could go down. It didn't play out the way I expected, so I'd rather be on the sidelines. If I miss out on that and it keeps going, that's just tough. That's just trading. And it's better to do that than stay in, you think. So if you're looking at this one going, last time I got out of something, it turned out and retraced on me, and it went straight back up again, and I would have been back in profit. So I'll keep this one. Now this one could be the one that turns around and doesn't look back and drops 20% from where you should have got out, another 20 or 30%. So that's not what you want. It's always better to manage your risk as foremost, the most important thing, I think. Well, that's what I think anyway, is managing your risk, especially at times where we are now, when Yeah, there's a massive a bear case. There's a bull case as well, and the markets are going up. But there's a big bear case, which a lot of the times, the more entrenched the trend is up, they could keep ticking away, but it can also turn quite hard and fast, and you may not get much warning. So it's good to know exactly where your risk is for anything. And don't forget, if you get chopped out, you can always either get back in if it sets up again, or you just pick something else. There's going to be something that's moving okay. So a bit of a sermon there, wasn't it? Now, what was I saying? What was I going to get into? I think it's important. What I just want to touch on today is basically your trends and stocks and bits and pieces that, if you aren't, this is one we're in, for instance. I don't know if I was going to talk about this one, but this is SRG Global. We're getting this at 44, and it's back where I just touched above 60, 62 today, 62 high. So it's really started. You could see previously it expand higher and then it sort of consolidates. So you have one good day, a couple of red days, one good day, a couple of red days, maybe a couple of green, a couple of red. So it was the trend. It was getting accumulated more than anything. That's the way it seemed. Where the action lately has been green, 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 green. So it's really started to come on the radar of, I would say, a lot of slow traders. But it's starting to get a bit ahead of itself. Maybe anyone that's been accumulating through here, maybe up here and building a bigger position, is in, and they're watching it get a bit of head of steam now as it comes onto a lot of, say, maybe the medium to longer term traders that are looking at it. Good news. There's been some good news flow which is broad in the buying. It's looking good, but you got to ask yourself. I'm not one just to sit around and stay in something because of the longer term. I'd rather be out reassessing if it's going to pull back, buy into it again if it still starts to set up. I think everything goes up and down in waves. We all know that. You got, whether it's on your daily charts and your weekly charts, and I think it's important to know what both those timeframes are doing. Your daily and your weekly. I mean, if you're going to buy into it, and this is what we'll touch on in a minute, when is it worth buying into this one that could be a great daily setup on your, technically on your chart? You've been watching this one for a while. It's undervalued. You've done all your fundamentals on it. It looks great on the daily. And you look like you've got a great setup, but then if you flick it back to your weekly, you go, oh, hang on a second, it could be really stretched on the weekly, and it has some more work to do on a different time frame, as in longer term. And don't forget, there's a lot of the bigger players, they don't work on a daily time frame, they work on weekly. If they're trying to build a position, they're not just all in one trade like we may be, or especially into these mid to large caps stocks, they don't just go bang in one hit. You might just see, okay, they're all in today on one hit. They might be accumulating, trying to build that position. And then they might build half a position. It gets a bit ahead of itself, potentially like this SRG here. And they just wait for a bit of that weekly pullback. So if you look at the weekly, it's had a good little lift here. The MAs are still down. There could still be, it's getting extended right up here around that 60 mark. So they might just sit there and go, look, I'm just going to wait for have a bit of a pullback, might go to 40 or 50, start holding that level, then they start to edge it again. And they start building that next leg up. Or the next leg starts to build, and they're accumulating again on another leg. Their targets might be up towards $1. They think it might be overvalued at $1. It could be worth, a lot more than where it is, but they're still trying to build that position. So I think it's important to know what the longer terms are doing as well on your weekly charts, what your timeframes are doing. So could you get out? Should you get out? Should you book it, reassess, or should you hold? There's another one, for example. We go back to this one. This is Freelancer. Now, don't ask me. I always forget where we got in. 86. So Freelancer, we got in at 86. Don't know if it was here. Anyway, so we're in at 86. Probably in that little breakthrough there. And that's just kicked on nicely. The volume was a bit tough. You can see, but it's been starting to build up. And it's still just ticking higher, ticking higher. Now that on the daily, wouldn't go near that just now, but we're not willing to close out. You can see that action looks great. I don't want to close it out because I actually really do like the weekly charts. So I think the longer term, this could easily stay stretched and punch through $1 and just keep grinding up on the daily charts and get overextended on the weekly. It's getting there, but the weekly could have a lot more move in it. We could be looking up to, we're just finding a bit of reaction off that dollar mark now, but we could easily just punch through. What's that, $1.10? so $1.18. So that sort of $1.15 to 20 mark, we could easily punch through there. It's another, what, 10 or 15% on top of what we got. We're up about 30, 40% at the moment, somewhere around there. But this one, I really like that weekly, and I think that's your first leg up. We've had that good correction, good clean out on your weekly basis, and we're only sort of just started. We've only just kicked off where we got in around that 86 mark. It was just starting to kick off on the weekly basis. So on a weekly, if you just take from low to high, potentially from 40 up to 90, that's 50 cents. Take it from 65, say, 60, 65, takes it about the 115 mark if it extends the same sort of volatility projection or that same sort of leg up. That's your base on the weekly. So that good clean out, back to the MAs in your weekly, and it's starting to lift again. So really, we could have a target of 115 or so on the weekly. So the weekly's looking great. It's just that daily's looking extended, but there's no reason to get out because the daily's extended. I'm always happy just to tighten things up a bit because if it's going to go, it should just keep going on the daily. Keep ticking away and really may have a bit of a clean out, a bit of a spike low, but generally it's going to hold the trend up on the daily as well, and get to that level on a weekly basis. Does that make sense what I'm saying there? So that's an example, a good little example of when both those timeframes, when you're looking at both of them, okay, there's a good, if we were down on the weekly, it's just sort of pushed back up, made a lower high, and you're in that region where you expect a lower high, but the daily's looking like this, I'll be more inclined to just close it out or really tighten that risk up, because I don't think on the weekly when it's trending down, it's that easy to turn. Like you can just turn around on the dime and go straight back up. If that makes sense. I've got one that I'll find. Facebook, my auntie just popped up then. So CUV, this is one, I want to say it's, as a bit of an example, I think this is it. No, that's not it. Trending, where's one? Oh, maybe it's this one. Okay, this one, is it here? I think this is it. So on a daily, that's, you've got that pop up above the MAs, come back down to the MAs, traded around the MAs a couple of times, banged up. Just make sure that's it. Yep. Banged up again, so another leg high. Doing the same sort of thing. So what we did back here, between say March and April, or March and May, before we had that leg up to $2, we seem to be doing that same sort of price action again. So if you were looking at this, you go, I'm going to stick and do the same thing. So sooner or later, that's probably your line to stand below 160. It's looking good. If we get a bit of a pullback to 170, bang, I'm in. I want to jump in, put my risk below 160 or 155, thereabouts, below that high low in here, and see that leg up. We're going to ride it through to look 220 or 230. It's a good little gainer, but if you flick it back to the weekly, you got to take into account what's happening on the weekly also. All in all, this could be just another lower high. Okay, on the weekly, we did the same sort of grind up here, 1, 2 legs up. We've done 1, 2 legs up already. Started to get overextended, so maybe that $2 region, there's going to be longer term sellers that just want out for whatever reason. They want out. They're not going to let it get too higher. They're not going to wait to see if it can get up to 220. They're going to bail around that 2, below 2, which would put your pressure on the daily chart. So it's always important to know, if you're going to buy here, where your risk is. That's great, but what's the potential that this is going to give you a good return? And look at that monthly. That's well and truly down. That monthly is just back to the MAs here. So what's the potential when you're looking at the longer term charts for that trade just to keep going? Is it going to get some legs, or is it just a short term, maybe buying it around 170 on a little pullback, 175, and then as soon as if it stalls anywhere below 2, bang her out? Are you going to trade like that? Which I don't think a lot of people will be trading that way. Or are you going to get the wind in your sails with the weekly, on a weekly uptrend, and you're looking to buy, if you flip this over, you're willing to buy on a weekly pullback and using your daily charts for the entries and get the potential of jumping into the start of a nice trend up, or a higher probability that's going to be a nice trend up. I think at the moment, with the way the markets are, which we were just looking at before on the ASX, it's important to have trading the higher probability setups where you can see some legs in them if they start moving. And we mentioned this before. If they do start moving, you're right, and the market turns, it doesn't necessarily mean that they're going to get sold into. I think the ones that are in a well-established longer-term trend and have been going for a while, the market turns sharp, I think they're the ones that are going to get hurt quicker or sooner, because it's just people's nature to book the profits. If the fear starts kicking in, they're going to book profits rather than closing out any losers, because in their mind, okay, you can't get any worse on your losers. Let's just hold those because they could easily bounce back. But the winners, there's a lot. You just want to book that gain in times of crisis, which is kind of weird. It's a lot of the time you should just be letting your runners, your winners run and closing your losers. You should never really be in a situation where you're down quite a bit on a stock and you're just sort of forgetting about it, waiting for that bounce back. You should have already potentially been out if it's trending down like this, even on the weekly. Knowing, like I said before, knowing exactly where your risk is. So that's another example. I'm just trying to find, I think FMG is probably a really good example of something it's trending high. You can see it clearly on the daily, but also on the weekly. You probably, that I only just noticed that then, that little spike, whoops, you can see this little spike through the previous high of 934. We got up to 955. Whether or not that's going to bring in some pressure onto Fortescue and start to see more selling come in, starting to tip over. We know that iron ore has just kicked on really well, and sooner or later it's going to come into people's heads. This could keep ticking on, or are things getting a bit extended? Is it fruitless trying to really squeeze some more out, expecting to push to 10, expecting to push to $15? Of course you can, but I think because trading is not just one mindset, it's many, many different mindsets. And I think we're going to talk the averages of people and the way they think and the way they trade. I think everyone, if they see that the longer the trend goes, you're generally going to start to be thinking, should I be taking some profits? Should I be taking some profits? That's going to start eating away at you. The higher it goes, the more you're going to be thinking that. So I think probability says that there's going to be more people that have been, long from $5-6 even, and watch these gains just keep ticking on, and the iron ore keeps going up. The first cracks that start to appear is going to be a bit of a heads up to potentially take profit. Not saying that's going to happen, but what I'm just trying to explain is when you get something that keeps ticking along nicely, there could be early signs that people are going to start to book some gains. But looking at that, what I was trying to say before is a bit of a flip side to when you've got the weekly going down and the daily setting up. This one, when it's an established trend and it doesn't play out, like we don't actually see the sell-off, but it's in a prime position. This one's still going up. FMG, you sort of got a little minor anchor at 6, another one around 7, then you got this one about 775, say. That low just there led to a break through the high, so that's the most recent one. So we're coming into a zone where, even on the weekly, it's coming back to the MAs. And we're starting to, all we're really doing now is looking for a zone where it's pulling back. We found some selling pressure off the highs. Are the buyers going to kick in again? Are the buyers going to start putting up a fight? And are they going to start pressuring it higher? And you can see that it's pretty clearly around that lows of about 860, 1, 2, 3 touches. If this starts to lift here, you can easily just put a line across the highs there. If it starts to break out again, that could be the zone. So you know where your risk is going to be, around the 850 mark, below 860, looking to buy on a rise and looking to target a move up through 950. And you've got good confirmation off the daily that weekly trend is going to continue, and you should be seeing a push through those highs. So you can see when you've got the weekly in your sales, the weekly pressure or time frame trending higher, along with a good daily setup, it makes it a high probability trade that you're going to kick on to new highs, that longer term trend is going to continue, and you can take advantage of it. MP1's another one, which is, the same sort of thing. The only problem I find with this one, that weekly trend is up. It hasn't changed. Nothing's changed. If you're looking at the daily for the entry, potentially any minute now, I like to prefer, I prefer to trade off a higher low of some sort, potentially like this, just in here. You can see bounce down, got a green candle, red candle, didn't take out the previous low, and then it starts to go up. Okay, buy into that move, and then just see how far you can follow it. I'll be looking at something like that, but you can see it's just bouncing off the MAs on the daily, MAs, so trend is up, higher lows. The pressure also, with this move down, the pressure from the sellers is is increased a bit. You can see from the 2 previous moves back, move back here, move back to the MAs there. The pressure wasn't so high from the sellers. It has picked up quite a bit, but the price is holding up. It's holding up really nicely. So it shows that any sort of move down, even though the sellers have come in for whatever reason, the buyers are still there. The buyers are still strong. The buyers are still willing to buy it up off the MA, and there's still got potentially some more to go. So if you're looking at, that there, that you're in that zone, perfect zone for potentially a continuation trade on the daily, and that weekly trend is up. The only thing I look at is this extended? And these are all the things you've got to weigh up. Is this worth throwing my money at? Because the weekly trend has got ahead of itself. You can take it from low to high here. It's about the same sort of projection, even more. So this initial leg up, where it consolidated sideways above 3, and it started to take off again, this leg up here has been a bit more savage, or a bit more extended than the previous leg. So is this a high probability? Potentially not on the weekly. For me, you're probably a bit late to that trend. There's nothing to say it can't continue on. So I think point I'm really trying to get at before we start talking about some charts is that I think it's just as important, look at your daily setups. I like looking at my setups on my daily. You can even go a bit lower to a half an hour hourly time frame if you like, just to refine it. But excuse me. Generally on the daily, if you've got a stock that you're interested in, you like the story, you like all these sorts of things, it's come out with positive news flow, like we were saying before, an RSG, I forget the code, SRG. This come out with some good news flow. So it's starting to lift off higher lows. I'm happy to take a punt at that one. See how it goes. We jumped in, and the weekly started lifting as well. So we had good news story. Weekly starting to lift. We're early into the trend, or we're early into a potential trend at that stage. I think the probability was on our side, and we're looking to buy nicely and just see how far we can, we can take this move. But always important to, I think, step back to your weekly just to see what the weekly's doing. If it's in a downtrend, it's going to be a tougher trade. I think it's always going to be a tougher trade. Doesn't mean it can't work out. You might have been perfect timing in your daily. It turns, it just keeps going up in the daily. Great, good on you. But I think more often than not, that's not going to happen. It's not going to be the case. It's going to be some sort of retest on the weekly, a higher low on the weekly. And if you bought before that higher low, you're going to get squeezed out before that the big trend actually starts, or you just get stopped out, if that makes sense. Like I said, not all. G'day, Peter. It doesn't happen all the time, and there's going to be times when. Let's just draw it up here. Like I said, this is your weekly trend, and you get into about here. No, that's not your weekly trend. Sorry, this is what I'm talking about. The move's down on your weekly, and you could buy in here in the daily, but you're expecting that to be like a V-shaped recovery. So you can buy on your daily, and that weekly just goes like that. That's, I think, more often than not, it's hard to, is a low probability setup. I would more assume that you might get it extend a bit and then come back down. Come back down to retest the previous low, and then start to lift. So this is sort of the weekly action I would expect if it's coming out of a downtrend on the weekly. A pop-up high, you're going to get, rather than a good extension lower, shallow retracement, good extension lower. For me on the weekly, I'd rather see a deep retracement towards the previous high, rather than this. If you can see, just go down here, a deeper extension that's showing that the buyers are starting to get a bit more committed and the sellers are easing out. Maybe the selling's done, you don't know. But that's what the deeper retracement from a downtrend is showing. Now, then I'll be looking for my higher low, and essentially I like this kind of thing where they get a couple of legs lower. This is a higher low comparative to the previous low on the weekly, even if we can just a bit better there. That's what I'm talking about. Does that make sense to you guys? Just trying to say, this is the kind of action that I'll be looking for on the weekly, and then somewhere in here, if you can go down to your daily and get a nice little setup, that way you've got the high low on the weekly. That potentially that weekly pressure is starting to ease, and buyers are stepping in on a weekly basis, and bigger buyers that are starting to accumulate and build that position. And you're going down to your daily really just to refine your entry. Now it's the reverse. If you've got a weekly trend up, that's your weekly trend up. You're just looking to buy in the pullback and looking down to your daily. So this is when things are looking really rosy. This is when you're trying to fight the weekly trend. All right. I hope that makes sense there, guys. So put in some shares, some codes that you want to look at, and we'll jump into it. Hopefully that makes sense. I've just start thinking about these things during the day and thought, I might as well just talk about it. But I think it's important to, especially now, it's not a bull market. Well, it probably is a bull market, I'd say. But there's a few headwinds that could be popping up, and that could change real fast. The market can turn really fast. So I think it's important to get, rather than get these ones, say you're looking to buy in here because of your daily, like we just said on, was it FXL? CMA might be another one. I was just looking at CMA. It's probably not really. CMA actually looks really nice. I like this on the daily, but I'm tentative purely because that's well and truly extended on the weekly. So I think that could sucker a few in. Pop up here, maybe just take out this high, wash out that high at 288, touch 290, 289 even, and then roll over for a deeper correction. I think for me that's could be the case, and then that would be a deeper correction. It's back to the MAs on the weekly, and then you start, off we go again. All right, what do we got? KCMU. That the US? Good on you, Laurent. Bang, there you go. I asked for them, Laurent provides. Excuse me. I can't laugh too much because it gets me. What do we got here? So we'll see if MU stock micro technology. Obviously not, is it? Oh, no, it is. There we go. MU entry at 46.10. I'm guessing that's the high. Excuse me. So you're looking for it to take out the high, continue on up, and then your stop is going to be 391. Is that? Oh, plus minus $3.91. So was it 46.10? Somewhere around 43. Maybe below that high low. Fine. 57.66. Look, that one there, for me, doesn't look too bad. I always think these look a bit stretched, but hey, if you're looking at this, so that's your move up there before we had this retracement. If that's your new leg up from this base, 49, say 50 mark, could easily extend there. Maybe asking for 57 is a bit tough, but we'll see how that plays out. It's basically up into these previous highs above 57. Longer term, not too bad. It'll be interesting to see how this one plays out. Different style of trading there. That's definitely a continuation from that move up from 32. All right. VIN, KTD. Dairy, that's not, it's a small E. What's the volume on that? It's got some offers in there, which is good, whether they're stacking it up there. Is there any particular story with this one, Vin? So it looks like that's all the data anyway. Yep. I don't mind that at all. You can see the beauty of this one is that as opposed to this move here, I'll draw it up. I just read your comment, Lauren. Cheeky bugger. Yeah, normally I'm slurping coffee, aren't I? Lately it's either been the coffee or the cold, the cough. All right, so we got this one here. So I don't mind. You've obviously this is when just before it IPO'd, I think it just took off. So you got that run up there, good move down, and it started to lift here. If we're going to buy into that, you'd want to see some sort of contraction there, and then the higher low to build. You want buyers to start stepping in, and away you go. Then that move could have targeted up towards those highs. Instead, it just kept chugging away. But you can see what this is all taken into account what's happening. Okay, so what we can see, it's obviously coming down. Yeah, but we don't know where to. We don't know where it's going to pull up, and that's the important thing. You're not. This is why I'm a big fan of not trying to pick the bottom. Don't try to anticipate. If you're saying, "Oh, that pullback there, it's rallied here. I'll buy into the pullback above this high because it's going to hold." It doesn't hold. Oh crap! I'll get stopped out. I'll do it again. I'll buy in above, somewhere around here into this low, and it'll go back up to the highs. Bang! Oh crap! It didn't happen again. You get stopped out. So that's what can happen if you're trying to pick the low. You're trying to pick the bottom. You don't let the bottom play out. So what you're really trying to do is assess the action, the price action, to see, okay, what's happening. And what you can see, one thing I've noticed just with this one is that the sell-off is quite extreme. It did power up, okay, bang, come down quite sharp. You can see the sell-off is, initially was really hard. You can see by the steepness of that gradient of that first move down. Your secondary move down is starting to ease, and then this move down again starting to ease. So that's taking out the lows, but the selling pressure is starting to ease. That or the buying pressure is starting to pick up because they're soaking it up. They're not going to, if someone's going to build a big position, you're not going to stand in front and try to defend a level. You're just going to buy it on the way down. Let the market, the selling pressure run out of steam, and then you start to buy more. But as it's starting to rise, so you're averaging down. I wouldn't recommend that's good for a small account, trying to average down. But if you've got a big position you're trying to build into this, you really like this stock, it's quite thin, quite small, but you want to build a bigger position, you might have to do it that way. So what you can see in that sell-off down here, we're not sure if that was the low, but essentially it's just retesting this previous low. But the pressure, all right, is really starting to ease. So that buying pressure is now picking up, and the selling pressure is really running out of steam. So that's your first sort of spot. By the time you hit here, if you're looking at this stage, okay, you can see quite clearly it's starting to get that sort of a curve effect, meaning that buyers are stepping in and that selling's running out. So whoever wanted to sell it, the selling's pretty much done. Okay, it comes to a point where there's only a finite amount of people that are going to buy and a finite amount of people on the flip side that are going to sell. And you're trying to pick that point where you think if you want to buy into it, where that selling's going to run out of steam, where it's going to finish. And what am I seeing? I don't think you get that from fundamentals at all. Because again, fundamentals, they're saying it's undervalued, but it can always go more undervalued or more overvalued, the same when you're buying. So that's not going to tell you, but what's going to tell you is the action and the price. There's no way around it. If people don't want to sell past a certain price, done. That's okay. We know that's potentially a bottom. And if they're starting to lift it, they're starting to pay up for it. Okay, we know there's interest there. Doesn't matter if it's, if it's overvalued here. If it's overvalued at 45 cents, that doesn't matter. People are willing to pay up for it for whatever reason. We don't know. We're not going to argue with that. We're just going to try to buy it and see if we're right. So you can see that sort of curve playing out. And this is your first sign, a couple of green days, bang. Now that is a couple of green days off that support zone. They're at 32. That action's completely different from what's happened. It happened a bit here, but that's probably bargain hunters and they got that wrong. Maybe someone here, a bit of bargain hunting, they got it wrong. But by the time we're easing down here, there's no big green candles. It's pretty obvious that the market's heading south. If you try to do that, you try to buy it early, you got caught out again, and then you're giving up. Or you're going to be bit more patient this time. But that action there is completely different to what we've seen in the past, and it's off a retest instead of a break. So that selling pressure is easing as we come further along to the right-hand side of the chart. It's easing here, and then we've got a couple of good green days, and even the next day, it's important because it took out that high. So you go, okay, maybe we're going to consolidate between support and resistance. I don't know, or maybe this is the start of a new trend high. So that's what we're trying to, but with a break, with this red candle here, with a break through, say, 50 cents, I could be fairly certain, I would be fairly certain that that's starting to, it's not going down anymore. It's going to start to either go sideways or lift. So the next question is, what am I going to do? I'm going to wait for a higher low. For a higher low is going to tell me that buyers are starting to step up at a higher level, and that's where I want to start to jump in. I want to jump into the market and buy it on the rise. Does that make sense? And you can see what happened after that. You've got this high low in here, started to rise. So however your entry criteria, if it's set, break of that candle there, maybe this that green day, break of the high, the next green day, you're buying it. You really didn't come in. You come back to about break even here, and it started to lift. You might have taken some partials, whatever. Not, you're up quite a handy amount if you bought it around that 45 mark, up to 70, 40% or thereabouts. And then it's come down. But what you're seeing here, for me, is that it's starting to find a bit of a line in the sand, because we've just done that same thing. What we did here, that big sell-off, down to 47. 1, 2, down to 47. Okay, that started to ease. You can see this very similar to this. So this type of price action on a bigger scale is playing out on a smaller scale. And then you got the break, this red candle here, which is this move up here. Same sort of thing, back to retest. It's a higher level at 47. Back down to retest, and it's got this 47.5 mark. It's tested, touched it here, potentially here, tested it here. So that's starting to hold up. Then you got that expansion. Okay, higher. So what's the next thing to look for? Higher low. Higher low, buy in the break, know where your risk is, and see if you can take out that high. At 70, even you'd be looking up towards 85. So definitely, I think that one's a good one, Vin. I think that's pretty good. Don't know how we'd go with volume, but it's a smallie. If you've got it, I think you're on the right side of it. Does that make sense there, guys? Hope so, because it took me a while to explain all that. Let's go on to the others. Z1P. I was thinking this is a short, but the last few days it's getting well contained. The volume's dying off, and it's starting to go sideways, but there is potential for, if it doesn't, and because of that washout there, I don't like that washout on the 28th. It's heading high, good pullback, wash out that low, started to lift. You got this bit of a lift here, come back high, low at this stage. Let's just get it up here. High, low around $3. Couple of green days, got to the high, open, washed out, straight back down again the next couple of days. So it's not, for me, it's not very convincing. It struggled here to get back up again. If that was positive, it should have gone. We shouldn't have got these couple of red days start. After that day, you should have expansion, back up to the highs, basically targeting 4. Instead, we got a couple of red days. Okay. It's not so much bearish though, because it did the same thing on the flip side, through around that $3 mark. Green day here, but followed by a red day. So for me, that's not convincing. I mean, I wouldn't touch this long, or I'm not short, wouldn't go short just at the moment. I'm biased short purely because I think some more heat has to come out of this, and it can easily flush lower and spend a lot longer just into the same day. Yeah, so there's another good excuse too. The more competitors they got, why would you sit around holding this one? Are you on the right one? Is it just going to keep punching higher as more competitors enter the market? And I think that's, sooner or later, if this doesn't go up, there's going to be some people that are loaded long, whether it be $1.40, $1.50, $2, or if you're up, the higher you get, the higher you bought, the more pressure you're going to be under, and the probably quicker you're going to start taking those profits if you see any form of weakness. Now, on the flip side, if you're looking to buy it, I wouldn't buy it just yet. I want to see a good expansion higher followed by a pullback to build that, and I want to see buyers stepping in at a higher level. So say something can push up to 340, a pullback to say 325, 330, and that hold, and then look to buy on the rise again, because then you know that something's happening, it's starting to lift, holding some higher levels, buyers are stepping in earlier as it's rallying, and then up we go. But at the moment, it looks like it's teetering from a big sell-off. But that's just my view on that. We'll see. Look at that weekly. It could just go sideways from here and start to lift. You don't know, but either way, I'm not inclined to buy it. Magna, how are you? Magna. Mr. Benz. Well, we got VL2. We get through a few of these. VLT, look, that started to lift, looking for a pullback. You want to see it hold above 22.5, 23, thereabouts, bit extended at the moment. So maybe that initial buying thrust is done. See if they can pull back and just see what happens from there. Real smally, VLT. Weekly's not, it hasn't got me overly enthusiastic. That's why I'd definitely be waiting for that high low. I want to see pull back to potentially above 20 and hold, especially on the weekly. And that for me would give it good emphasis. It's going to push higher. So that's VLT, IMD. IMD, don't mind that. It's that weekly. Look at that weekly. Good press up. A lot of consolidation, lower highs, minor lower highs, lower lows. And this little run up here has got me thinking that that could be, we spent a good part of a year. What's that? May. Good part of a year consolidating sideways essentially or slightly down. So that's a good sign of strength, especially after this move up. Consolidating, cleaning out a few of these late buys, longer term, and potentially building in. I think it's still got some work to do. I don't want to see it lift up through the highs just yet because I think that's too quick. And I think the market's not going to, buyers aren't going to let that happen just yet. The bigger boys, it's not that big, but I'd want to see it a bit more contraction, but contraction above 117 and below 130. That's ideally what I'd be looking for. And then if you can get a nice little entry set up, then away you go. IMD, dub, I think it's pretty much gone quite hard, hasn't it? I think this on the weekly for me, just flicking it back, that's a 1, 2 strong legs up. If you're buying it around here, yeah, great, because that's your first weekly expansion higher. You've got your contraction. You're looking to buy in a contraction. That's your first time it contracted on the weekly. And then, so that's into here, great. But this is the second time. So this is not the unknown anymore. This move up is well and truly known by pretty much anyone that's scanned the markets in the last few months, 6 months even, or year. No, it's 2019. So the last 3 or 4 months, if you've done any sort of scanning and looking at it, you'd know about DUB, dub. So whether you're willing to buy it on these highs, again, 1, 2 moves up, it's becoming more low probability it's going to continue on and get the same sort of result. 80 cents to double in price. Essentially, you're asking it from going to 130 to 260, or even another 60. What's that? 80 cents, potentially up to $2. You're asking it to go to $2 and another strong leg up. That for me is a bit lower probability. So I'd just be keeping an eye on this. I'd like to see a bit more work done. But then again, on the daily, if this holds a higher low and does this type of thing, starts to lift, it's definitely worth a buy because that momentum is up. It's looking good. VRT, yeah, that daily looks okay. Again, it's just that weekly. This is just what we spoke about. Press down here, try to go up here, consolidate just around the MAs on the weekly, went down. So we've just gone above the MAs here, but it's in a downtrend, a weekly downtrend that's getting extended. You can see, extended up around that $5 mark on the weekly. So buying it in here, I'd be thinking twice about that. I'd rather see something done on a weekly, maybe retest a higher low, building here, some sort of clean out of these guys that have bought it off $4 to $5. That's a 25% gain if you manage to buy it off those lows around here. So you need to clean out a few, pull back, and then see if it can reset itself for the longer term. I just don't think longer term it's got a good move up in it just yet. KSL, King Securities, what are they doing? Not bad. Okay, weekly's up. Weekly's up, great. You really just want to see something like this. I think probably missed the boat a bit only on today. Would have been a nice move up through high of 138. Buying at 139, you're sitting up 5% just from today. That would have been a clear entry with a stop just below 133.5. Yeah, and you're taking it, that daily has gone up, contracted, consolidated those highs, which is good. Rather than see it pull back, you want to see consolidate the highs. The deeper the correction, the less emphasis the buyers have, but the higher the correction, as at the higher levels it holds. So if it holds the top third of the move up, if I can draw that, so if this is the move up, if you can hold the top third in here, good sign of strength. The deeper it pulls back, the less sort of strength. It got 50% retracements, not as good, not as positive as a 30% retracement, but it's better than a 60%. So if that makes sense. So that you can see is holding that top upper level. Here it's probably only about 50%, but you can see what I'm saying. Consolidated, spend some time holding that. So the longer it spends holding around that level, the more positive the potential move up, the next move up can be. So that looks good. Weekly's up, daily's up. Probably right now buying it here is a bit late, but we'll see how it goes. Talk to that. IHL. Let's have a look at that then. IHL. Preston Healthcare. What have they done? Yes, moving up again. That would have been a tough one for me to jump on board, but it's up. What have they been doing? Cleansing, update, placement. Something placement. 9th of July. Is it a bit of a ramp? 1.65 million. What's the placement price? 1,000 new shares and issue price of. What? Am I reading that right? Which relates to the offer of 1,000 new shares. That's not right. An issue price of 0.038 per new share to raise up to $38. So the 1.7 million through the issue of shares with. Seems a bit weird there. Maybe I've got that wrong. Preston takes 1.65 million placement to accelerate medical cannabis activities. Good old cannabis. 3.8 cents per share, 1 to 2 free attaching option at 8 cents. Okay. At 3.8, I don't like that. Look, that's way down here. Yeah, look, I got a feeling this is being ramped up a bit prior to that settlement, but I don't like the fact that placement is so low. I get suspect of that sort of stuff. I'd rather be up towards the high end of the move. And I think potentially that was probably looking fine up to about here. Then it got ramped up to $7, sorry. So if you've got it at 3.5, I'll be straight out of those shares and holding the options for a free hit at highs. I think there'd be a lot of traders that would be doing that. So basically, I tend to just think that's going to be leaning on the downside. But we'll see. Either way, it looks okay. It's a small stock too, 36 million market cap, and it's got some shares there. Yeah, but I wouldn't buy that just because of that placement. I want to see that the placement get squeezed out of the market, or see if that selling can get done. Hold some higher levels and start to rally again. Actually, EDE looks pretty good. 10 minutes, it's slightly bigger than that. It's done nothing today, but daily looks pretty good, and the weekly. The good thing about this is in a downtrend. The weekly, it's still that's your key high at what 13 cents, but it's retested and even cleaned out, and that was sort of what we were saying before. It's obviously come to a point of agreement where people are happy to buy it, and the selling's come out of the market. This is your probably that's your first sell-off. Good reaction. Second sell-off, that is just as steep. Good reaction. Probably not quite as steep as previous. So it's like the selling pressure is still there, but it's early signs that it's running out of steam. The less steep it is, good reaction up. So this is all actually really good reactions back up. Quite solid. This is obviously sellers running out of steam, if you ask me. And that's near that sort of 3 cent mark. Previous lows were right back down about the same level, were they? No, a little bit higher. So that's at 4. So this is at a previous low. Took out the previous low, took it out again. But I think the selling pressure is really starting to ease up, and then it started to rise again. I think on a weekly basis, the first time really you've come into a level, you've reacted back up, and you've just retested the level, even slightly broken it. But I think really that Weekly still down. It's just, if you bought it here, it has got the ability to push up to 10 again. Okay, you've got 40% gain, which is great. But I'd like to see, I would really prefer to be buying something that is starting to expand on the upside rather than still coming down. But that's definitely, it's moved up. That's a cracker. Even on the daily short term, you got that green candle there, buy it through. You can even buy it a bit earlier through that high, 4.4 cents. Say you bought it at 4.5, you got risk of next to nothing lower, 4.1, but your risk of 4. Percentage terms, yeah, but look at that expand. It really took off. That's an inside level. We love seeing that. Expanding, come back to the MAs, come back, settling at a higher level. Buyers are starting to step in. If they start to push it again, we know it's probably going to take out this 5 cent level, which it did, and then straight back down. Now it's consolidating here, so it'd be interesting to see what it does here. When it comes back, the MAs, and does a similar type of thing where you can buy into it, minimize your risk, and look for that run to 10. But yeah, just be wary of that weekly chart. That's on my only view. WHC, let's get onto that. Excuse me. Wow. All right. WHC's on the way down on the daily, but the weekly is the one you'd want to be watching for now. I'd steer clear of that daily, because the daily's down. Let's just have a look at the weekly, then look at the daily. So what we'll be looking at, you got your leg up, consolidation. So that was quite good. Next leg up. This is major consolidation, major correction, corrective price action. So that trend really is sort of down here. Potentially that's what's holding it down to. You can see you can break that down to, up, these sorts of moves, and it's still going down until that's broken up, potentially. If this takes off and trades up to, say, 450, great. Then that trend may start to be coming out of the sideline and start to rally. But until we do that, the trend is still down on the weekly, and we don't know where it's going to. It could go all the way back down to 275s. Don't try to argue with it, just watch it. And wait till the action actually shows you something. Never be worried about missing something, but it's 385 been up and down, but sideways at 360. Oh, it seems to have resistance at 360. Yeah, I tend to agree with you there, Andrew. That there, yeah, I would be looking at going, okay, if I could look for that minor pop, go back to the daily, this little pop, because that's your key level on the weekly up towards 450. This trend, if that's down, you probably get up towards, potentially you can pop up to 390 or 4 even, wash out this previous high. If the weekly is going to continue lower, it might just get a bit of steam here, get those initial buys, and then turn around and squeeze them back out. So it may pop here. If you're looking to, you can even just tighten your stop up. Where's your stop? You could look just to put your stop above these lows, and then if it gets to about 390, then take it off and call it a day. Or if it continues on, great. But if it doesn't, then you can just book a small gain. That's the way I'd probably attack it, but see how it goes. All right, let's just 340. I'd tighten it up. That'd just be me. I don't like having too much. I'm happy to have tight risk, because if I'm going to be right and that happens, great. I'm not risking much, but if I'm wrong, I don't want to risk too much at all. I'd rather be out. And then, if it's going down and stops you out at even 355, 350.55, it's probably going to take out that low. It's probably going to hit 340 anyway. Because it's got a lower high in here. That daily's down. Nothing is up at the moment, weekly or daily. You're just trying to pick. You're just trying to really hoping to see if it can pop up to get a chance to get out, I'd say. What was the last one? So we just look at your last two, Magna. I've been watching these. LTR cracker. Yeah, it's got a bit of some wind behind it, isn't it? It's extended. I wouldn't touch it up towards 16, but good volume come in, good volume in this rally, whatever reason. So it's been lithium, good old lithium. People love lithium, but I don't know what it's doing. Anyway, that's great. Up, consolidate the highs around that 10 cent mark and start to lift again. Really good. resources have been going up, which is great. There's nothing to say about that one. It's going up. It's going in the right direction. Looks good. If you're looking to buy it, you'd want to see something like this, and signs it's going to continue on up. But if you're looking at it from a weekly, it's extended. In my view, it's extended. The volume's come off too. So your volume on that big move up there, consolidated, less volume, when continued up to 16, but the volume's easing off. So the amount of people willing to buy it up here has really backed off. So you just want to be looking at that go, because if you're long anywhere from here, it's going to be a turn. Sooner or later, you're going to want to book something, and you're going to want to get out. That's the way I'll be looking at that. Looks cracker. NET, I know that's going good too. NET, look at that. This could be rejection today. Maybe the first signs that there's some profit taken up here. But if it can hold up above sort of that 25-cent mark, this could be a new leg. Boom. It could start, but that's just gone so bloody hard. From 10 to 30, you triple your money. I would never complain about that. Yeah, it's a good one too. All right, guys, might have to call it a day there. Yeah, it's just done just over an hour now. So yeah, thanks very much for joining us. I hope we got through everything. I think we did. Hope it all makes sense to. If it doesn't, feel free to send me an email to support@tradesetup.com.au, and I'll get back to you with some sort of good explanation. I'll have to make something up, but generally it'll be pretty good. Hopefully it makes sense. Yeah, like I said, any questions, just send us an email. Thanks for joining me, and we'll be back in on Monday again at 12:30. So feel free to spread the word. If you like what you hear today, thank you, because I was rambling. But yeah, it'd be great if you can leave us a like at the end of the video on YouTube. But yeah, thanks very much, guys. Speak to you again soon. Bye.